Well-known author, investment banker, consumer advocate, analyst, trader. Chris Markowski is the watchdog on Wall Street.
You want answers?
Exposing the lies and myths that the big brokerage firms, the mainstream press, and the government are pushing to keep Americans away from financial freedom.
You can't handle the truth.
Bringing America the truth about what really happens in the financial world.
Ladies and gentlemen, we're not here to indulge in fantasy, but in political and economic reality.
This is the watchdog on Wall Street.
I don't know how people find out, but they do. And I thank you, all of the people that sending me birthday wishes on this, I guess, benchmark birthday, landmark birthday, half a century birthday. Thank you. I appreciate it. It's funny. You hit these benchmark birthdays, I guess, landmark birthday, whatever it may be. I don't do. I feel any different? No. No, in my mind, I don't. I tend to hurt myself a little bit more, not acting my age in the gym and doing stupid things. But I look back. How about you? You had a benchmark, landmark birthday. You look back. It was interesting. I was giving a talk this past week, and there was a lot of young professionals in the room, and I was explaining to them. I said, I look back to when I was 40, and I was an idiot, and I was just that much dumber when I was 30, and even more of an idiot back when I was 20. Trying to explain to them, you have to understand that you don't know what you don't know. But one of the other things that's hit me right now is I'm reminded of things that have happened. For whatever reason, I got stuff that I forgot about, things that happened to me that I forgot about years ago that are coming back into my mind. And they're good memories. They are, because I learned from them. This past week, I saw this story. You're familiar with the commercial on TV, Farmers Insurance. We are farmers. Da, 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 da. Well, there's a story about how Farmers Financial Solutions, the broker-dealer arm, had to settle with FINRA after failing to supervise their insurance agents in the sales of certain products. Yes, you guessed it. Variable universal life insurance products. And I'm laughing because, again, I'll get to it. It reminded me. I'm sorry if you happen to be one. If you happen to be one of these insurance agents and put yourself off as some sort of financial planner, shame on you. Shame on you. You're not a fiduciary by any stretch of the imagination. You're an insurance agent. You're there to sell as much insurance as possible. And it reminded me, and I'll share this story with you, back when I was in college. Again, the idiot that I was back then. I was feeling a little bit self-satisfied, proud of myself. Remember, I got the internship that I was looking for. I was going to work at the Equitable Life Insurance Company. I got it. The Equitable Life Insurance Company in downtown Syracuse. And I remember I needed some new suits, and my Aunt Virginia, who I miss very, very dearly, gave me some money, and I went down to Marshall's and I got myself some suits so I could go into work. So I go down there and I got a job, and I'm helping out these insurance agents and stuffing envelopes and doing the stuff that interns do. And busting my butt, doing what I was told. And I, again, feel good about myself. Go back to class and to work. And, wow, look at all this. And I'm working with this guy and that guy. I was just excited. I was a kid. And I get called into the office. I don't know, maybe a week and a half, 2 weeks into it. And they said, Chris, you're doing a fantastic job. You really are. This is what we're going to do. This is what we're going to do for you, Chris. We'd like to see you continue to work hard. We're going to allow you to get your licensing exams. So what was it back? It was Series 6 in life and health. We're going to allow you to do that. Wow. And I'm thinking to myself, this is amazing. I can end up with a job. I can graduate and I can have these licenses, just kind of like a feather in my cap, maybe great for my resume. Again, okay, I'm just a kid, 21 years old. Anyway, they then proceed to tell me about this variable universal life insurance policy. They were teaching me about it, and they were telling me how this was something that would be great for me. Great for me. This is a great vehicle for you, Chris. This is something that you should think about. Now, mind you, okay, I don't have any dependents at 21 years old. I am, basically living hand to mouth, waiting tables, bartending, doing everything I could just to get by. Yeah, I could afford a life insurance policy. Yeah, I didn't think anything of it. I said, well, this could be a good idea. I go back, and I have this stuff, and I go back to the restaurant after job. Go back to the restaurant, and the owner of the restaurant. I learned more from the owner of this restaurant than I did in quite a few of my classes, to say the least. And I start talking to him about it, and he starts laughing. He starts laughing. He said, Chris, what the hell do you need life insurance for? You're 21 years old with no dependents. And he was, kind of explaining to me what this was that I was purchasing. So I was, again, disappointed. Okay, this is a major point. Okay, talk about landmark. This is a learning experience for me, 21 years old. I go back to work, and I don't really, think anything of it. I remember a week goes by, and the insurance said, Chris, did you fill out that paperwork? You take a look at that stuff? You fill out that paperwork for the life insurance policy? Yeah, I haven't had time yet. I kept putting it off. And eventually they kind of like, Chris, we need you to fill this stuff out. They needed me to fill that out because they needed to make their quota for their job. These guys were selling life insurance to their interns. The Equitable Life Insurance Company. Yeah, as it turned out, I didn't sign up for the insurance. Guess what? They didn't give me the books. They didn't sponsor me for any exams. Again, it was a learning experience. And over the years on this radio show at Markowski Investments, we have dealt with countless examples: annuity fraud, insurance fraud, helping people out. Do we provide these services to our clients? Yes. Okay. Annuities, certain insurance products, whatever it may be, they're tools to be used in very certain circumstances. They're not for everybody. And it reminded me, again, this past week, a column, and I looked it up, a column I wrote back in 2005. 2005, and the title of the column was Avoid Ned Ryerson. Who go out there, okay, movie buffs like myself, people who think like, I remember Ned Ryerson from Groundhog Day, the insurance agent. You remember? Phil Connors would be on his way every single day to the groundhog, and there he would, Ned Ryerson. Do you have life insurance, Phil? Because if you do, I bet you could use more. Who couldn't? But I got a feeling you don't have any. Am I right? Ned, I'd love to talk to you, but I really have to. That's okay. I'll work with you. When I see an opportunity, I charge it like a bull. Ned the Bull. That's me now. Some of my friends live by actuarial tables, but I think it's just a crapshoot anyhow. Ever heard of single premium life? That could be the ticket for you, buddy. God, it's good to see you. Hey, what are you doing for dinner? Yeah. Salesman looking to sell you as much insurance as possible. Well, one of the things that we put down in our Markowski Investments Watchdog and Wall Street top 20 financial independence, you own the right amount of insurance. Not a penny more, not a penny less. And that's going to change throughout your life. It's going to change based upon your circumstances. Insurance, to quote Chris Rock, is something that you purchase in case bad stuff happens, and you have to manage that. But anyway, if you need help with this aspect of your finances, your financial preparation, it's something that we do and we work hard on. I wanted to talk about this as well. Again, another story I saw this week that, again, jogging my memory, things that have happened to me in the past. The Attorney General for New York filed a lawsuit against, you're going to be familiar with this name because they advertise all over the place, in particular on conservative radio programs. CNBC, Lear Capital, and their founder, Kevin DeMeritt. Well, they're suing Lear Capital for cheating New Yorkers out of almost $10 million. And that's just start. This is just in the state of New York. This just in the state of New York. Oh, yes, they're the coin dealers. Precious coins we're going to sell people. Anyway, you know what? we're going to take a break. I'm going to share with you kind of a really great story, another kind of learning experience for the Watchdog back in the day. WatchDogOnWallStreet.com is our website. Again, I invite you to take advantage of all the great stuff we have at our site, in particular our personal CFO program, where we help you with everything. Whether it be insurance, whether it be with your taxes, whether it be with trusts, and of course, your money. That's what we do. We're basically your personal CFO. You got it? Personal CFO, your own family office. And guess what? We help everyone, whether you're just getting started out or you're well on your way. Get to our website, sign up for that, watchdogonwallstreet.com. We got annuity help kits, we have account repair kits, my newsletter, podcast, all sorts of great stuff. Watchdogonwallstreet.com, or give us a call, 800-471-5984. That's 800-471-5984.
You should believe in math, not magic. You're listening to The Watchdog on Wall Street with Chris Markowski.
Yeah, welcome back, everybody. It is the Watchdog on Wall Street show. We take the liars, the crooks, the cheats out behind the woodshed and give them a beatdown. Lear Capital, along with all those other gold salespeople out there, are full of what comes out the backside of a bull. Always have been. Always have been. I go the way back machine when I was much younger. When I first got started in radio. Now, we've been on the air for over 20-something years now. Was on a network that had some really great hosts. You're talking Michael Savage, Laura Ingraham, the late Jerry Doyle, Rusty Humphreys, and the network was doing really well. Eventually it blew up because the owners were morons. But anyway, neither here nor there. I got approached by these gold companies, and they're like, Chris, we'd love to advertise. We'd love to advertise on the Watchdog on Wall Street show. And this is how it works. All the money that comes in from our advertisements to buy gold, I love gold, or silver, whatever it may be, you're going to get this amount. And the number was, to quote Donald Trump, huge. I'm like, whoa, wait a second. I'm in the financial business. Most of our fees are around 1%. We're talking commissions of upwards of 50%. 50%. You do understand that that's a scam. No, I understood it. I understood it completely, and I refused. And the people who ran the network, they were none too happy with me when I said, no, sorry, no gold ads on my program. Keep that crap away from me because it's a racket. And it is. This is one of the things that people fail to understand. You buy from these guys these gold coins, this silver nonsense, whatever it may be. You try to sell it tomorrow. Okay, you're going to lose 30 to 40, 50% on your money. Is that an investment? Would you buy Apple stock today? knowing that if you tried to turn around and sell it tomorrow, you'd be down by that much? And you see, look at Robert Kiyosaki, and this one is on this, and this expert here are talking about it, and they have the little Zoom calls in their commercials. There's a special place in hell for these people. There is. And what we've been dealing with, and we've been dealing with it over the years, is people that call up, that got scared. There'll be a disconnect in the market. There'll be a pandemic. There'll be a financial crisis. And all of a sudden, they get some phone call, they see a commercial, and they take all of their money and they buy silver coins with it or gold coins. And the stuff's worthless. Now, it's not worthless, but you're down. Not to mention the fact that those gold coins and those silver coins, guess what? Guess what? They don't yield you a damn thing. You're not taking them to the grocery store to buy anything. They don't produce any sort of, there's no power of compounding with any of this crap. Gold, silver, commodities, they can be used in a portfolio a certain way, most certainly not through coins, in order to act as a hedge. And we've used that stuff and other commodities, baskets of them in the past. But it needs to be done the right way. As it turns out, Lear Capital, like the other dirt bags in this gold racket, gold and silver precious metal racket, again, targeting in particular senior citizens in upstate New York, western upstate New York, people who are looking to safeguard their retirement savings. They invested tens of millions of dollars across the board. They were cheated out of tens of millions of dollars. Does it surprise me? No. Is it new? No. Been going on for a while. It's one of the things that drives me nuts. It drives me nuts on a lot of radio stations, too. I'll be quite honest with you. Okay? I know I'm going to get some phone calls from radio station owners out there. You might want to look to see who's advertising on your station. You might. You might want to see who is advertising on your station. You also might want to look to see who you are allowing to come on your station and run infomercial radio shows, in particular over the course of the weekend. Again, I understand you got a bottom line and all that stuff. But, like Martin Sheen said, Martin Sheen's character, and remember in Wall Street, he's telling Bud Fox, he says, I don't go to bed with no whore. I don't wake up with no whore. That's how I live with myself. I don't know how you do it, buddy. Be good, do good. We're Adam Smith capitalists here. Getting over on people is no way to do business. And again, pretending that you don't know when you really do know exactly what the hell you're doing. I'm sorry, I have a problem with that. I really do. Anyway, we've got issues and why none of this stuff ever gets caught. Nobody ever deals with any of this stuff. First and foremost is that there's really no cops on the street when it comes to the gold and silver racket out there. There really isn't. They really don't have anybody looking at them. You have to have an attorney general or whatever go after them after they've ripped people off. But that's part of the problem, and that's what I've been explaining to people. If you think that the SEC, they're not. Never have been. Here's a classic example just from this past week. The Securities and Exchange Commission. Securities and Exchange Commission wants more climate disclosure from businesses. They want companies, they're now tasking people at the SEC to make sure that corporate America puts in their annual reports their effect on the environment. People are getting ripped off on a daily basis all around the country, and this is what they want to do? Let me ask you a question. Would you task your police department in your town to go out there and start doing waste removal? No, you have a waste removal department that handles that. Why in the world at the Securities and Exchange Commission? They're gonna, you know what? Forget about protected investors and looking for scams and fraud. We are now going to go out there and make sure that companies are putting charging stations in their parking lots. Are you out of your mind? But again, and we've made this clear in the past. They're not cops on the beat. They come in after the fact, after you've already lost money, and do the entire CSI. And again, I remind you, they had all the information on Madoff. They had all the information on all the penny stock guys. Did they do anything? Nah. We do. And that's what we've been doing for over 20 years here on the program. Watchdog on WallStreet.com. Watchdog on WallStreet.com. Become a part of the Watchdog on Wall Street family. Sign up for all of our great stuff. Watchdog on WallStreet.com, our personal CFO program, or give us a call, 800-471-5984.
You're listening to the Watchdog on Wall Street. Bringing America financial freedom one listener at a time. You're listening to the Watchdog on Wall Street with Chris Markowski.
Little Van Morrison, Brown Eyed Girl, great tune, little happy hour staple back in the day. Anyway, welcome back. It is the one, the only, the Watchdog on Wall Street show. I want to touch on this and have a little fun with it as well. Melvin Capital, ring a bell? Melvin Capital! Yeah, that was the one that got whacked in the whole GameStop run-up. Oh, the apes, the army of retail traders went there and basically whacked Melvin Capital. Another one, White Square Capital, another hedge fund out there. They're calling it quits, sending money back to investors. Again, be honest with you. I think Forrest Gump said it best. Stupid is as stupid does. Stupid is as stupid does. For years, we've been warning people about hedge funds and what happens and the lie, the myths that surround it. They bring these hedge fund guys on CNBC and Fox Business, and they're in Forbes and all of these places. And most of them not that bright. They really aren't. It's a great racket. It's a great way to get you to part with your money. Many, many moons ago, we wrote a column about this as well. We were talking about hedge funds. And it was a column by Mark Gilbert. I think he was writing for Bloomberg at the time. And he had a funny way of explaining hedge funds that I like to use here because it was pretty good. It was basically, we're using bovine. We're using cows. Wall Street goes to the cows. How about that? To describe how hedge funds work, okay, if you're not familiar. You have two cows. A guy wearing a very nice suit, no tie, accessorized with a $100,000 timepiece, pulls up to your farm in his Aston Martin. Mr. Master of the Universe. Yes, financial engineer. He offers to take care of your two cows, and in return, he's going to provide you with a 1-year supply of filet mignon and 50% of their milk yield. Now, again, you wonder, how in the world is this possible? But no. Mr. Master of the Universe, he's a financial engineer, right? He's a financial engineer. He's smarter than everybody else out there, financial engineer. And, of course, he has the suit, the car, the watch, the estate, the 20-year-old Victoria's Secret model girlfriend to prove it all. Now, the only caveat with this is that your cows are not going to be able to leave his Greenwich, Connecticut compound for 2 years. 6 months later, you look at your account statement, right? You look at your bovine account statement, and you realize that all you have is half a cow that's producing sour milk. So, what the hell is going on here? You call up Mr. Master of the Universe to inquire about what happened, but Mr. Master of the Universe, he didn't return a call. Didn't return a call for a while. He returns your call several weeks later from the Cayman Islands while drinking a bottle of 40-year-old Chateau Lafite. He's chewing on some filet mignon, and he offers you up some reassurance. Okay, Mr. Master of the Universe, he offers you some reassurance that everything will eventually be just fine. And he tells you this. He says, you can get a good look at a T-bone by sticking your head up a cow's ass, but wouldn't you rather take my word for it? He hangs up, and then you come to the realization that he's quoting the film Tommy Boy. At that point, you realize you've lost. But again, that's okay, because these Mr. Masters of the Universe, they're going to continue to reside in their palatial estates. They're going to, whether it be in Paradise Island, whether it be in the Caymans, whether it be in the Hamptons. They're always okay. You get it? Nothing bad is going to happen to them. It is what it is. Got to take a break. A lot more we got to go over on the program today. A lot more. WatchDogOnWallStreet.com is our site. WatchDogOnWallStreet.com. Take advantage. All the great stuff we have at our site. Account repair kits, our personal CFO program, all sorts of great stuff. Sign up for our podcast. Half an hour every single day. Short and sweet. We dispel all the nonsensical narratives of the day. WatchDogOnWallStreet.com or give us a call, 800-471-5984.
Taking Wall Street's liars, crooks, and cheats out behind the woodshed. You're listening to the Watchdog on Wall Street.
Welcome back, kiddos. It is the Watchdog on Wall Street show. All right. Yep, as expected. My email box filled to the rim with questions about cryptos and whether or not I feel that it's the right time to get back in cryptos because cryptos came down under $30,000. Come on, people. I've tried to explain this before. I've written columns about this before. Okay, in regards to crystal balls and trying to guess what's going to happen next. Do you honestly believe? Do you honestly think that I'm able to time cryptocurrencies, a made-up money? Do you honestly think that I have that sort of capacity? I don't. How do I put a value on something that has no business plan, has no cash flow? How do I know what are going to be good entry points or bad entry points? And the fact remains is this: nobody does. They may tell you that they do. They may tell you that, but they don't. Do you remember the scene in the movie Rain Man where, again, Dustin Hoffman's character, the Rain Man, he's killing it at the casino. He's killing it at the casino in blackjack because he can count cards in his mind. He's a genius, mathematical genius. He can count cards in his mind. And I'll never forget the scene where he walks over and as Tom Cruise is next to him and he looks at the roulette table. And Tom Cruise knows, okay, that I don't care how smart this guy is, he can't win at the roulette table, but they play it anyway. I think they lost, if I'm not mistaken. You don't know. You can't value it. Oh, crypto gurus. Mark Cuban got crushed in his position. Bitcoin, oh, it's down because the Chinese are cracking down on crypto mining. Do you know that there was some person, I'm not making this up, some person, there was some new crypto, some new magical new coin that this guy put his money into, and I think he lives in Georgia, put $20 into it. He woke up the next day. You know what his statement said? Said he was a trillionaire. No. I'm not kidding. You know what his account said? $1,421,954,401,507.38. That's not a bad investment. $20, right? Anybody think that he got his money out? Huh? Anybody think that he got his money out? All these Coinbase and all these trying to figure it out how that happened. $1 trillion? I mean, how does that happen? It's not real. I know I'm sub-referencing a lot today on the program, but Donnie Brasco said it best. It's a fugazi. That's a beautiful thing. Cryptocurrency is a beautiful thing here. Beautiful thing is Lucky stuff. No. It's a fugazi. You get it? And you got to be careful with all of these fugazis. There's a difference, people. There's a difference that I've tried to get across to people over the years here on the program. And actually, Jason Zweig wrote about it in the Wall Street Journal this past week, talking about investing, trading, speculating. You go on CNBC, you watch CNBC, watch Fox News, Wall Street Journal, Forbes, any of these, or Barron's of Financial Times of London. All of these publications are wrong. They've been wrong for a long time. And what they've been wrong about is one of the most basic distinctions in finance, as Zweig puts it. And that, you know what it is? You know what it is? Calling something an investment, calling someone an investor. There's a difference between investing and speculating. And we're going to get into that when we get back. Watchdog on wallstreet.com. Watchdog on wallstreet.com. Who do you want to be? And where do you want to be? The question is, where do you want to be 10, 15, 20, 30, 40 years down the road? Watchdog on wallstreet.com. We'll be back.
This is the Watchdog on Wall Street.
The Fix. Remember their other popular song, Saved by Zero? Yeah, we all saved by 0% interest rates for what we're getting? No, I don't think so. But we'll talk about inflation a little bit later on in the program. I don't want to lose my train of thought here. But anyway, newsflash. Newsflash to all you kiddos out there. You kiddos out there that think that you've got it all figured out. Yeah. Listen, I was there. I watched what happened back in the 1990s when everybody thought that .coms would go to the moon forever. I remember Stewart from Ameritrade. Go online, youngsters. If you're not familiar with the commercials, you don't remember all of the online discount trading house commercials back during the .com boom. Stewart from Ameritrade. I'm going to take the market. I'm going to shake it upside down and do all sorts of stuff. And tow truck drivers with their own island. And kids with their own helicopters. An E-Trade Center in Midtown Manhattan, which I basically called Midtown Manhattan's first casino. Well, first legal casino. If you buy a stock because it's just gone up a lot and you haven't looked at anything about the company, you know, the management, you don't understand anything in regards to the fundamentals, you don't know anything about it whatsoever, you are not, as all of these publications will call you, you are not an investor. Got it? If you buy Doggy Coin or some other coin that some porn star is pushing or a rap star because it sounds like fun, you're not an investor either. But again, doesn't make any difference. This is where Zweig's got it right. Whether the Journal, CNBC, they call these people investors. You buy a financial asset because you have a hunch or just for kicks or because somebody famous is hyping the heck out of it, you're not investing. What was it that happened the other day at the Euro 2021 there, the soccer championship, European soccer championship? Some guy runs onto the field with something, pitching some new coin out there. What you are is a trader. You just bought an asset and a speculator. Okay? A speculator is someone who thinks other people will pay more for it than you did. Right? That's what a speculator is. In many respects, it's just about going out and finding a greater fool, right? Finding a greater fool. This is why I don't like them when they call them spec houses. Okay, I bought a spec house. No, you bought a house and then you went in and then you made improvements to that house and you made it better. And then you're hoping to sell that. That's not speculating. Speculating is just, you know what? We got this thing here. I don't know what the hell it does. I don't know what the hell this thing is. It makes the widgets or something like that. I don't know. We got this new coin out there being pitched by this rap star. Okay, but it's going to get really popular because so-and-so's going to hype the thing up and I'm going to be able to sell it. That's a speculator. Okay? Do you understand? An investors look at, again, fundamentals, earnings, income growth, the value of assets. A speculator counts on external sources of return, whether somebody else will pay more, regardless of the fundamental value. Regardless of what that fundamental value was. And again, I'll break this down in terms of real estate. When I saw homes in Southwest Florida back in 2005, 6, 2007, houses that were built and sold for $150,000, no improvements made at all in the house, a year later being $300,000. And again, it not being a supply and demand issue because there's nothing but houses being built as far as the eye could see. Something's amiss there. The word investor comes from the Latin investire, which is to dress in or clothe oneself, surround or envelop. You would never wear clothes without knowing what color they are, what material they're made of. Likewise, you can't invest in an asset that you know nothing about. Nothing about. Zweig in his column, he talks about a guy that we often talk about here on the program, one of my teachers when it comes to managing money and finance, Warren Buffett's teachers, a gentleman by the name of Benjamin Graham. He's got 2 classic books, Securities Analysis and The Intelligent Investor. He wrote a column in 1962 to the Wall Street Journal, angry with the Journal because they were put a story out there. Many small investors bet on further drops, sell odd lots short. And his issue is by what definition of investment can one give the name investors to small people who make bets on the stock market by selling odd lots short? Again, it's a very risky thing to do. If these people are investors, how should one define speculation and speculators? Isn't it possible that the current failure to distinguish between investment and speculation just might do some grave harm, not only to individuals, but to the whole financial community? Might it? It does. It does. Let me put it to you this way. Benjamin Graham, he wasn't nose in the air. He didn't think that the stock market and stocks and investing was just for the blue blood crowd hanging out at the country clubs. That was the point behind his books. He wanted it to be available to everyone. You can choose to listen to me or you can choose not to listen to me. But you can go back and you can take a look at our track record and what we've done and what we've called. There's the right way of doing things. There is a wrong way of doing things. And again, I'm going to remind you that everything in life that has meaning, value, and worth involves work, time, and effort. Watchdog on WallStreet.com. Watchdog on WallStreet.com. Again, become a part of our family, our personal CFO program. Watchdog on WallStreet.com. We'll be back.
Chris Markowski is the watchdog on Wall Street. Well-known author, investment banker, consumer advocate, analyst, trader. Chris Markowski is the watchdog on Wall Street.
You want answers?
Exposing the lies and myths that the big brokerage firms, the mainstream press, and the government are pushing to keep Americans away from financial freedom.
You can't handle the truth.
Bringing America the truth about what really happens in the financial world.
Ladies and gentlemen, we're not here to indulge in fantasy, but in political and economic reality.
This is the Watchdog on Wall Street.
At what point in time we should just call it a day and just join the European Union? What do you think? You think we should do that? I mean, we're well on our way. You had Joe Biden attend the selfie summit there with all of these G7 nations agreeing to a tax cartel, and Macron and all these other falling all over themselves, thrilled with Joe Biden because the United States continues to make ourselves less competitive. Level the playing field. Give everybody, all these countries, a participation trophy. Let's get more Americans addicted to handouts and giveaways. And this does make me sad. The White House has now rolled out a massive PR campaign to highlight the government's new expanded child tax credit. Yep, it's part of Nobody Messes with Joe's coronavirus relief plan. Families with children under the age of 6 are going to get a tax credit of $3,600 per child, while the tax credit for children between the ages of 6 and 17 will be $3,000. And you're going to get paid. You're going to get checks in the mail. I want to remind everybody this credit is available to couples who earn $150,000 or less, or heads of households who earn $112,500 or less, or individuals who earn $75,000 or less. $150,000 household. Let me tell you, there are many places in this country where $150,000 goes really, really far. You are top notch. You're making six figures in certain parts of this country. You are doing really, really well. There's a big difference between $100,000 or $150,000. We'll use that in the New York metropolitan area and Albany, New York. I'll pick on my hometown. Big difference. Doesn't matter. Doesn't matter. You're going to be getting a check. I don't know why it has become my responsibility and other taxpayers' responsibility to pay people to raise their kids. We do in some respects. I mean, I pay my property taxes. A lot of it goes to the schools. I pay my federal taxes. I pay my state taxes. Who knows how they go about using it. But now that some of these taxes are going to be used to send to families. I don't want to sound mean and crude or whatever it may be, but the reality is if you can't afford to have kids, you shouldn't have them. If you have to rely upon your fellow citizens to pay for your kids, don't have them. It's my right. Yeah, it's your right. But why are you forcing me to pay for your kids? It's just that simple. It's going to help families out. That's all well and good. I have no problem helping families out when people are in need. I don't have any problem with safety nets. But they want to make this permanent. They want to make this another entitlement. Do you understand that just handing out money doesn't always make life better? Do you get that? It doesn't always make life better. I happen to be a big believer that overcoming obstacles and achieving goals is the way to make people happy. I think that you need to have meaning in your life. And the perspective that I can lend to this is, again, I've been managing money for people for a long time. And I've seen many people that say, you know what, I'm going to retire, and they want to work. And I'm like, you sure you want to do this? You sure you don't want to do something? Yeah, I'm sure. And they come back to me 6 months or years later. I said, I wish I was still doing something. Well, you still can. You got to get back. You got to be doing something, because you'll lose that. You'll lose it. Years ago, I wrote about a Cato Institute study talking about welfare, handouts, and giveaways and what it does. And basically, it's like a drug. People get addicted to it. They get addicted to it. And what happens within the communities where people get addicted to it is the same thing that you would see if the entire neighborhood was addicted to some opiates or crack or whatever it may be. The same symptoms occur. So I basically said then, for all intents and purposes, the United States government is the largest drug pusher in the country. And that drug is welfare. During the pandemic, you had, now we have nearly 9.9 million people that enrolled just during the pandemic. Do you understand? 80 million U.S. citizens who live in the United States of America. 80 million people, record number of people, are on Medicaid right now. And I just want to continue to expand it. You're seeing stories out there right now talking about this universal basic income. We're trying Stockton, California. We're trying a UBI program. They're doing it in New York City right now. I'm not making this up. They're giving $1,200 a month to a group of homeless people. What could possibly go wrong there? What could possibly go wrong there? Think about this for a second. People living in the streets, you're going to just pay them $1,200 a month? Again, all of these programs, so far, these are all funded privately. There was another one I saw here. This is in upstate New York. Upstate New York, they're getting a group of people that they're going to be paying $500 a month, no strings attached payments. Experimental universal basic income program in upstate New York. Again, privately funded. And again, it's your money. It's fine. You get private money. If a bunch of wealthy people want to get together and they want to do a study and they want to hand people cash, have at it. Go nuts. It's your money. You know what this is all about? This is all about saying, we saw some good outcomes here. This is something that we should take nationally. And again, now I will have to spend more of my tax dollars paying people a universal basic income. It's insanity. And I mentioned the fact that we might as well join the European Union. The handouts and giveaways here in the United States are a lot more generous than they are over there. I'm just telling you right now, a hell of a lot more generous. Many of these European countries, after 2010, and they had the financial crisis over there in Europe, in particular, a lot of these Mediterranean countries, they cut retirements, their Social Security, they cut it to the bone, upwards of 50%. You think that going to happen here? I don't know. Maybe it will someday, but I don't see it. We'll just keep printing. And in essence, that's what some of those European countries would have done if they weren't in the European Union. They just didn't have their own currency anymore. Which, again, leads to what? Inflation. When are we going to say enough is enough? You take a look, you see the job openings that we have here in the United States. I speak to businesses daily that cannot find workers. They set up interviews with people, and they don't even show up for the interviews. I think a lot of people are just signing up for these interviews so they can put it on their forms when they can go get their unemployment and saying, hey, listen, at least I'm trying to get a job, because in some states you have to show that you're at least trying. This is not good. It's not healthy. And we'll get into unemployment, and we're going to tie it to immigration a little bit later on in the program. But I want to get into this as well. There was a Bob Kerrey and John Danforth op-ed that they wrote in the Wall Street Journal, basically asking the question, how long can America keep borrowing? And back in 1994, Bob Kerrey and John Danforth. Bob Kerrey is a Democrat and Danforth a Republican. Clinton had them in 1994 chair this bipartisan commission on entitlement and tax reform. They wanted to study the future of Social Security, Medicare, Medicaid, and recommend measures to make sure that they were viable long term. So remember, go back to 2004, George Bush gets reelected, and he wants to remake and work with Social Security and privatize part of it, but that got shot down, in particular by Mitch McConnell. There was unanimity on the commission on the scale of the problem and how entitlements were on an unsustainable trajectory, consuming an ever-growing share of federal spending. 1994, the budget deficit was $203 billion, 2.8% of gross domestic product. The national debt, $3.4 trillion, 47.8% of GDP. That's 27 years ago. The Congressional Budget Office in January 2020 said the budget deficit is going to exceed $1 trillion. The debt back then, $17.2 trillion, would double as a share of the economy over the next 30 years. And that doesn't even take into account $65 trillion of unfunded liabilities for Social Security and Medicare. Yeah. The CBO now projects, and they're going to be wrong, it's going to be more than that. The deficit's going to reach $1.9 trillion in 10 years. The deficit. The debt is going to skyrocket from 102% to 202% of GDP within 30 years. Anything going to be done about it? Are we talking about getting this under control? Are we working? And Bob Kerrey and Danforth, they talk about putting a commission together to deal with all of this. Yeah, another commission. Another commission to save our currency and to rid ourselves of inflation. They just keep printing. And again, it is what it is. It's something that we've been talking about and dealing with for a long time, helping our clients dealing with the fact that inflation is here. I know, Jay Powell telling you it's not, but it is. We'll get into that when we get back. Watchdog on WallStreet.com. Watchdog on WallStreet.com. Again, become a part of the Watchdog on Wall Street family. All sorts of great stuff there at our site. Our personal CFO program, podcast, account repair kits, annuity help kits, you name it. Watchdog on WallStreet.com, or give us a call, 800-471-5984.
The only man who is taking on the Wall Street establishment. You're listening to the Watchdog on Wall Street with Chris Markowski.
Talking heads for you here on the Watchdog on Wall Street show. Always honored to have you tuned in to the program. We're going to talk a little bit about inflation. I mentioned this on the podcast this past week. There's a couple stories I was looking at around the country, different places, how they're getting hit by inflation. There was a story out of Boston here where basically restaurant owners yelling and complaining and screaming and saying, hey, we were paying red meat for steak tips back in January, $7.35 a pound. Last week, it's $13.20 a pound. And it's, according to the National Bureau of Labor Statistics, it's not just there. It's cereal and bakery items. They say are up 5%. Fruit and vegetables are up 1%. Dairy products up 0.6%. And the reality is they're up much higher than that. Oh, I know there's been some relief as of late in lumber and certain commodity prices. But just take a look around and see how expensive everything is. And I was talking about this a year ago, I think, on the program. I was curious. I wanted to see what the cheapest car in America was. Let's see what the cheapest car in America was. And I forget the name of the car, but you know what I'm talking about. It's one of those little cars that have those almost like you look at the tires, they look like bike tires. It's like one of those cars that I could throw on the squat rack and I could, squat. Over 15 grand. You check out and you see how much a pickup truck costs nowadays. A pickup truck. And there's telling you that there's no inflation. The CEO of the commodity trading firm Glencore is coming out and saying, guess what? Prices are going to stay elevated for an extended period of time. Yeah, no. Don't worry. Don't worry. We can cue up the Lego song. Everything is awesome. Jay Powell and Janet Yellen. All the economists are telling you it's no big inflation threat. No big whoop. No big deal. Nothing to see here. Keep moving on, everybody. Keep moving on. Again, I know I've been hitting on this a lot as of late. Again, it's a difficult concept for people to understand. You are losing 10% plus. 10% plus the value of your money is going backwards by 10% plus right now. Oh, they're not telling you that. They're not telling you that, but it is. But it is. Do you understand how hard we have to work? And granted, markets have done really well. Certain asset classes have done very well. That's what I have to keep up with. Okay? That's what I have to keep up with. Now, when inflation is running that hot, normally you would get some sort of safe rate of return that was comparable to that. You can't. Because they are forcing interest rates down to ridiculous lows, and they're telling you that it's a good thing. That's a narrative, okay? This is what we dispel here on the program. That's a narrative, and it's wrong. They're like, oh, well, look at how cheap mortgage rates are. It's freaking awesome, man. Look at how cheap mortgages allow people to go out and buy homes. Mortgage rates, okay? Mortgage rates at low levels, all it does is it drives up the price that somebody can sell their home for. Do you understand? I try to get this across, and a lot of times, I don't know, maybe I'm not doing a good enough job of it on the radio, okay? You take a look at a mortgage statement. Part of that mortgage statement is interest. Part of that mortgage statement is principal. And sometimes you might have, taxes and insurance are included in that. Now, people can afford X amount of dollars. Let's say if you could afford $5,000 a month, $5 a month on mortgage payments. If interest rates go up, guess what? A greater portion of that $5,000 is going to be allocated to interest, less towards principal. Thereby, what? Interest rates go up, guess what? The price of the home comes down. There's an inverse relationship, so it doesn't matter. They're telling you it's so awesome, but it really ain't. Because the value of your money is going backwards. Back in the day, we talked about that Bob Kerrey, Danforth story back when Clinton. Go back to 1994. 1994, you could be prudent. You could save money. Let's say you were a school teacher. You might have had a second job. Might have put some extra money away. You were just prudent with your money. And your pension is a part of that job. But you also saved $1 million. You saved $1 million, put $1 million away. You could take that $1 million and you could put it in a risk-free investment, and you would get $70,000 a year tax-free. A 10-year treasury, you do that with 10-year treasury, you're getting $14,000. $14,000 today. And we all know $70,000 back in 1994 goes a hell of a lot farther than it does today, not to mention the fact you take a look at $14,000. What I got to get you? This is the reality, people, that many don't understand, and how bad inflation is. I'm going to yell and scream about some of these idiotic economists when we get back from the program. We got a lot more we got to go over on the show today. Don't go anywhere. Watchdog on WallStreet.com. Watchdog on WallStreet.com. Hey, learn how we do it. Learn how we help. We do what we can to inflation-proof people's portfolios. Watchdog on WallStreet.com. Sign up for our personal CFO program. We'll be back.
You're listening to the Watchdog on Wall Street. You should believe in math, not magic. You're listening to the Watchdog on Wall Street with Chris Markowski.
And it's I guess it's a great job, a great gig if you can get it. Become an economist, in particular an Ivy League economist. Get yourself a paid gigs writing for the Wall Street Journal and other places, and you can continue to write whatever the hell you want, whatever sort of nonsense, drivel. You can be wrong consistently for decades. Yet it doesn't matter. Doesn't matter. You still got your job. You still got, you're still fancy pants college there. It doesn't matter. It doesn't matter. Again, you're like some of these hedge fund guys out there that are well connected. They blow up hedge funds, or they blow up firms. John Corzine blows up MF Global. Now he's running a hedge. Doesn't make any difference. You call your buddies in politics who'll get you pension money, get you started, get you up and running again so you can loop people all over. Well, it's just as bad, these fools that continue to write for these publications and continue to teach kids in colleges and universities nonsense. They're never right. Never right. Ticks me the hell off. I'm sorry, it does. And you got Alan Blinder. Alan Blinder, Princeton. Yeah, these economists, there was that, just thought about it. There was a movie, I don't know, is it late 1990s, if I'm not mistaken, Bill Murray movie. It was a spoof on spy movies, The Man Who Knew Too Little. The Men Who Know Too Little should be a movie about all of these Ivy League economists, consultants, and people who work in D.C. So Blinder's got a column out, and he's talking about all the erratic economic data that's out there, and he's trying to make sense out of it all. No. Stop listening to these people. Stop listening to these people. Can they do it? I mean, would you take advice? Let's say your kid. Let's say your kid wanted to be a baseball player and worked really hard at playing baseball. It was their dream. Now, the odds of them becoming a professional baseball player is slim in number. That's okay. You want your kid to do well, and you see that they're driven by something. Yeah, I'm a big believer in that. It was a household rule here for the Markowskis. I don't care what it is. Find your passion and work on it, and I will help you. I will help you in any way that I can. So you got to, son of us, be a great baseball player, and you want to hire them a coach, maybe. You work hard, you want to put a little money aside, hire them their own little coach, tutor, trainer to help them better. Are you going to hire somebody that's actually been doing it for a while, that has done it? Or are you going to hire somebody from the Ivy League that's going to pull up his analysis of something based upon a computer model? Who are you going to hire? Do you think that Alan Blinder, do you think that Paul Krugman, do you think that if you gave them some money, they'd be able to go out and start and run a business? No. Yet they managed to comment on all things economy. Anyway, I mentioned gotten into real estate. We were talking about the inverse relationship between interest rates, mortgage rates, and the price of homes. U.S. existing home prices hit record high in May. Biggest year-over-year price increase going back to 1999. Okay? And there's other stories out there where people are saying, we need to have the government's got to get involved now because prices are going up. Government Government's got to get involved. It should be part of the stimulus package. The U.S. housing market needs another 5.5 million. You know who's saying that? The Realtors Association. Realtors Association is saying that because they've got nothing to sell right now. Yeah, my neighborhood, the neighborhoods up by me, no houses for sale. No houses, so they're all sold. People left the city and they moved out here. There's not that there's not units available in the United States. It's just that nobody wants to live there. Yeah, you'll find plenty of a plethora of units in San Francisco. You can find a plethora of units in Chicago. You can find a ton of units and many more coming on the market in New York. Just nobody wants to live there. Real estate, you need to understand, is not, you can't look at these national numbers. It's all about local. It's all about the community. And a myriad of different things are involved with that. Commercial, again, the bottom continues to fall out on this. I saw this story. It was a See, I Told You So moment dating back to, I think, 1996, 97. I remember having this conversation where this major real estate developer and big-time donor to the Clintons. This guy's name was Conjal in upstate New York. And he was getting all sorts of tax breaks and government money to build this massive mall in Syracuse, New York, that's defaulting on all of their bonds, just like we knew it would. How is it that, again, I was a kid back then. I was a kid. How is it that I knew? Well, again, I understand how these crooks operate. Anyway, got to take a quick break. WatchDogOnWallStreet.com. WatchDogOnWallStreet.com. Again, we have a lot we've got to go over on the program. Don't touch that dial. Mind you, sign up for all of our free goodies and giveaways, our personal CFO program, all sorts of great stuff. Podcast, WatchDogOnWallStreet.com, or give us a call, 800-471-5984.
Bringing America financial freedom one listener at a time. You're listening to the Watchdog on Wall Street with Chris Markowski.
Real quick real estate story. It's a bit of a See, I Told You So moment as well. We told you this was going to happen. And I've actually had some people email me about this, and they're like worried that this is a bad thing. Blackstone is investing $6 billion in buying homes and renting them. $6 billion. Now, again, Blackstone also, after the financial crisis, stepped in and bought a lot of homes that were defaulted on and turned around and sold them at a profit. And again, buy low and sell high. Doesn't make any, nothing wrong with doing that. But a lot of people are concerned because they're saying to themselves, well, this is how many people, they build up equity, been owning a home, and it's better to own than it is to rent. No. You see, you hear statements like that. That's not always the case. It's not always better to own than it is to rent. I give this example of, let's say, some kid graduates from college. He didn't really have any student loan debt, maybe a little bit, and his grandfather left him some money, and he wants to get a job on Wall Street. Wants to. Not really sure what he wants to really do, but I'm going to take a shot at this. He wants to get a job on Wall Street. And he's got this money, and people say, well, it's great to own something, right? Great to own. You should go out and buy yourself an apartment. Well, wait a second. He doesn't even know whether or not he's going to like that career, like that job. 21 years old. No, it's better to rent in many cases. It's not always the best idea to buy. It turns out the kid hates Wall Street and gets offered a job he wants to work on oil and gas in Texas. Now he's got a house he just bought. And guess what? Real estate in New York has dropped. The bottom has fallen out of it. So he just lost a fortune. Real estate doesn't always go up. You need to understand that. And carrying costs with having it. What we try to get across to people when it comes to their overall financial preparation, think of Think of your home as if you're paying a bill on it, paying more. It's an installment plan purchase where, God willing, you hold on to it for an extended period of time. You're going to get a rebate on it in the end. Okay? It's a bill. I look at my housing costs, everything that goes along with my home, the upkeep of my home, as a bill. I have to live somewhere. I have to house my family somewhere. I take that out of the picture. God willing, down the road, hopefully the value of it goes up. Guess what? Fantastic. But guess what? I've been paying interest all along the way. I've been paying for upkeep all along the way. I've been paying taxes on it all along the way. The narrative out there that your home is always a great investment and real estate is always the greatest investment out there is just a lie. It's a lie. Anyway, got to take a brother break. WatchDogOnWallStreet.com. WatchDogOnWallStreet.com is the place you need to get to. We get into all of this. Written many columns as well. All those columns archived up there at the site. Take advantage of our personal CFO program. WatchDogOnWallStreet.com or give us a call. 800-471-5984.
Chris Markowski is the watchdog on Wall Street. Taking Wall Street's liars, crooks, and cheats out behind the woodshed. You're listening to the Watchdog on Wall Street.
Welcome back, everybody. This is the Watchdog on Wall Street show. I don't know if I mentioned it last week on the radio show. Sometimes I forget. I don't know if sometimes cover things on the podcast radio show and they overlap from time to time. That's okay. That's okay. We're talking about Lordstown Motors. Lordstown Motors, and again, talking about government getting involved in the private sector, which in my humble opinion is a no-no. It's a no-no. Government, private business should be a wall between the two, oil and water. They shouldn't mix. It doesn't end well for we the people. It doesn't end well for us. Yeah, the people that are running the show, the people that work at these companies, executives at the companies, the politicians, it ends well for them, but we, the taxpayers, we end up getting hit. Now, Lordstown Motors lied now twice on the quote-unquote binding orders that they had. As it turns out as well, the executives at the company were selling their stock in the company prior to coming out and correcting the lies that they were telling. Again, par for the course. Couldn't make this stuff up if I wanted to. Another quick business story. I saw this, and I love studying business and how they operate and how they become profitable and new ways of bringing customers in. And Louis Vuitton from LVMH are saying same thing that we've been saying here on the program. The idea that retail stores are going to go away is insane. That's just not the case. It's not going to be the case. They might look a little bit different. They might be downsized. But people still like that experience. Here's the quote from their chief financial officer. We see the future being two things. Being mostly retail stores because the client experience in a retail store cannot be matched easily online. As of today, no one has found the sort of miracle formula that would enable clients to enjoy as much online. The second point is also to enrich this experience with online content. Again, you go past the Louis Vuitton store. I was one in a local mall inside, I think it's inside Saks Fifth Avenue. They have their little stores, sections there. And there's a line. There's a line to get in. Whenever I have to go there, I'm going to shop and get something for my wife, looking around, there's a line to get into these stores. And again, that's not going to go away. Some of the suggestions that we made for retail here is for getting rid of a significant inventory at the stores, going in, having the experience, trying it on, having it fitted, then having it shipped to your house the next day. Or that day, for that matter. I mean, for crying out loud, they managed to deliver groceries to your door within an hour. I'm sure they can find out a way to do this. And it gets rid of loss prevention. You don't need as big of a physical footprint. And you can become more profitable. And it's just simple concepts that we talked about here on the program. But again, these managers, these Ivy League managers of many of these retail outlets, they haven't figured it out yet. They haven't. I don't know. I guess they have to talk to their McKinsey consultants, I guess. I want to talk a little bit about the Federal Trade Commission. Linda Khan has taken over this position. And one of the first things that they're going to do, I'm disappointed, quite frankly. They're going to get into Amazon's planned purchase of MGM. MGM has a massive catalog, including, of course, James Bond. James Bond, that movie comes out. That's one movie that I will go to the theater to go see. I don't really have no desire to go to theaters anymore, especially at the prices that they charge. But anyway, they're going to get into that purchase of MGM. And I'm saying to myself, are you serious? It's like they're buying a catalog, okay? They're buying a catalog, and Amazon wants to put it on its Prime service, okay? That is enhancing, that's enriching the user experience. I don't have any problem with that. In the same way, I don't have any problem if somebody wants to go out and buy more real estate. The problem I have is that Amazon owns the Washington Post. They own the Washington Post. All of these corporations own all of these major media outlets. I got a problem with Rupert Murdoch owning the Wall Street Journal. They own all of these properties, and they shouldn't. They should be broken up. They should be competing with one another. The quality of journalism is in the toilet everywhere. I paid it's close to $500 a year for the Wall Street Journal subscription. I've been reading it now for decades, going back to college, okay? And this is not me, my old man, get off my lawn stuff, okay? Journalism it's gone away. It's terrible right now. It's narrative pushing. And again, they work their various different publications to enhance what they're putting out there. This can't happen. This can't happen. The news is supposed to be there to help protect us, to root out criminality, not to push a story. This was getting bad. I remember back in the 1990s when we discovered that journal list where you had the editors of all these publications getting on this and figuring out how they were going to go about covering a story or pushing a narrative. No. So I would hope the FTC would look at that. Look at conflicts of interest. Again, one of the things, and I did talk about it this past week, Andy Kessler piece, and the concern out there is we shouldn't be breaking companies up if it benefits the consumer. Well, benefiting the consumer isn't just about price over the short term. It's about what comes down the road. It's about stifling future competition, better products, maybe lower price that could come out of that. Anyway, Watchdog on WallStreet.com, Watchdog on WallStreet.com. You know we've been fighting against Too Big to Fail for a very, very long time. Anyway, got to take another break. Don't go anywhere. Watchdog on WallStreet.com, our personal CFO program, all sorts of great stuff. Our 24-hour day help hotline, 800-471-5984.
You're listening to the Watchdog on Wall Street.